What if everything the market is terrified of right now is actually the exact thing that makes XRP inevitable? Not a short-term pump, not a speculative bet, but a structural necessity baked into the future of how money moves on this planet. Stick with me, because by the end of this video, the way you think about what's happening in global markets right now is going to look completely different. And I promise you the picture is far more interesting than the panic. Let me paint a picture for you. It's 1944. World leaders gather at Bretton Woods, New Hampshire. The world is exhausted from war. Currencies are in chaos. Trade has collapsed, and someone has to step up and say, here is how money works from now on. The result: the US dollar becomes the global reserve currency. A single nation's currency becomes the backbone of international trade. It works brilliantly, for a while. But here's the thing about systems built for one era: they eventually creak under the weight of a different one. We are living through that moment right now, and most people are so focused on the daily noise, the geopolitical tension, the interest rate debates, the market sell-offs, that they're completely missing what is actually being constructed beneath the surface. Here's what nobody is connecting the dots on. Every time a country gets sanctioned, every time a nation gets cut off from SWIFT, every time two trading partners can't settle in dollars because of political friction, a quiet, urgent question gets asked in finance ministries around the world. What do we use instead? We've seen this play out with Russia after 2022 sanctions. We've seen it with nations in Southeast Asia quietly exploring bilateral currency swaps. We've seen Brazil and China settling trade without touching the dollar. This isn't conspiracy theory, this is just Reuters and Bloomberg reporting, hiding in plain sight. And here's the brutally logical conclusion. If you're a nation that doesn't trust Russia and Russia doesn't trust you, but you both need to buy and sell things, you need a neutral settlement layer. Something no single government controls. Something that doesn't carry the political baggage of any flag. That description fits exactly one asset class: a decentralized, institutionally grade digital asset built for cross-border settlement. And inside that category, XRP has spent the last decade quietly building the one thing that actually matters in finance: real-world rails. Now, here's where I'm going to say something that might surprise you. I'm not bullish on XRP because the chart looks good. I'm not bullish because of hype or because some influencer has been pounding the table. I'm bullish because of a concept called the Lindy Effect, the idea that the longer something survives, the longer it's likely to continue surviving. XRP has been through the mt. era. It survived the ICO mania and bust. It survived the SEC lawsuit, which, by the way, was one of the most existential threats any cryptocurrency project has ever faced, and came out the other side with a legal ruling that actually clarified its status in a way Bitcoin and Ethereum never got. Think about that for a second. Every other major crypto exists in a legal gray zone. XRP got tested in federal court and walked away with a legal framework. That's not a small thing. In a world where institutional money needs legal clarity before committing capital, that is enormous. Let's zoom out even further, because I think the macro picture here is actually the most underappreciated part of the XRP thesis. For the past 2 years, the Federal Reserve's high interest rate environment has done something very specific. It has made doing nothing attractive. You could park money in T-bills at 5% and sleep well. Why take risk? But that era is ending. And here's what happens when rates come down in a world where institutions now have legal, regulated access to crypto through ETFs. The money doesn't just drift, it rushes. Because institutional capital has been waiting at the gate. The infrastructure custodians, prime brokers, ETF wrappers has been quietly built out over the last 3 years specifically for this moment. And now here's the question every portfolio manager at a major fund is going to ask. If I'm adding crypto exposure, what's the most defensible asset to hold in front of my investment committee? Bitcoin, you can argue digital gold, but it doesn't do anything. It just sits there. Ethereum smart contracts platform. But it's complicated, it's expensive, and it's lost significant narrative momentum. XRP fast, cheap, institutionally backed, legally tested, purpose-built for payment settlement, and already live in banking corridors across 40-plus countries via RippleNet. Which of those three is the easiest to explain to a CFO? Here's the data point that I keep coming back to because it's one of those signals that only makes sense if you understand what institutional investors actually look for. While crypto markets have broadly been under pressure, XRP ETF products have been pulling in consistent inflows. Not outflows, inflows. Now you can dismiss that in 100 different ways. But I want you to think about who is buying ETF products. It's not retail traders on their phones at 2 a.m. ETF investors are financial advisors, pension allocators, family offices, and institutions. These are slow-moving, deeply researched, committee-approved capital allocations. When that money moves into XRP and away from other assets, it's not a tweet-driven moment. It's a conclusion reached after months of due diligence. That signal, quietly buried in flow data, is one of the most important things happening in crypto right now. I want to go back to the broader world for a second because here's the reframe that I think is critical. Global tension doesn't destroy XRP's case, it builds it. When the Middle East is unstable, oil-exporting nations need alternative ways to settle trade outside of dollar-denominated systems. When U.S. foreign policy creates friction with trading partners, those partners accelerate their search for neutral financial infrastructure. Think about what happened when the U.S. froze Russia's dollar reserves overnight in 2022. That single event sent shockwaves through every central bank on Earth, because every single one of them looked at their dollar reserves and thought, could this happen to us? The answer to that question has to be, find infrastructure that no single government can freeze, infrastructure that is transparent, programmable, and runs on a decentralized network. The chaos isn't the headwind. The chaos is the marketing campaign for what XRP is designed to solve. Here's where I land on all of this. Markets right now are pricing XRP and crypto broadly as though the risks we're seeing are permanent, as though tariffs will last forever, as though geopolitical conflict means global trade collapses, as though the Fed will never cut rates. Markets are almost never right at the extremes. And right now we are at an extreme. The last time sentiment was this low in crypto, the next 18 months rewarded patient holders with some of the most explosive price action in the asset class's history. Not because the world got perfect, but because the price had already assumed the worst and reality just had to be less bad. I'm not here to give you a price target. What I will say is this: the structural case for XRP legal clarity, institutional adoption, real-world utility, global settlement use case has never been stronger than it is right now. And the irony is that the very things causing short-term fear are the long-term accelerants. The world is reorganizing. Money is reorganizing with it, and XRP was built for exactly this moment. If this gave you a different lens on what's happening right now, drop a like. It genuinely helps the channel reach more people. And if you're new here and you want content that actually tries to connect the dots beyond just price charts, subscribe, because that's what we do here. As always, stay sharp, stay patient, and I'll see you in the next one.